how FIIs are finally, looking at India favorably after having sold off over the last, 2 months odd or so. An exodus took place. The key segments, you did talk about some of them which are preferred ones for the FIIs. Let's talk about the heavyweights, IT and the banks, for instance, as well. What is the kind of sense that you are holding on the banks and the IT space particularly? Financials have been a key consensus play for most of the analysts thus far. What is in the offing? We've seen HDFC Bank come back to record highs, so that's the private sector boom coming in. PSU banks, after disappointing over the last few consolidation months, are now also coming back in flavor. IT, on the other hand, there is a lot of US overhang yet again with Donald Trump's coming over and taking over the office too. So, how does one really approach these two spaces?
Uh, in fact, leaving aside today's marginal correction in these two
Yeah.
sectors, they're two of my top picks from a
Okay.
1.5 year to 2 year perspective. The
Okay.
reason I say is, I mean, it's clear you mentioned Trump, but I think more important than the Trump thing is the fact that U.S. economy itself is showing strong gains, regardless
Hmm.
of Trump coming and supporting, right? And if you see then that with Trump also inclined to be soft on the taxes on the corporate side, the profitability of US companies go up, then they will invest in IT. And I think Indian IT companies have gone way past those days of the call center and those kind of a cheap outsourcing to value added IT consulting work. So I am second aspect is that the strength of the dollar, because you see one of the things to remember right now there's a Trump trade going on in the dollar, but I don't think this is going to just stop because when Trump puts tariff, this is a slightly nuanced view that I'm giving. When Trump puts tariffs, right, he has to fulfill that election promise. But the immediate impact of that is that inflation is going to rise for the consumer there. If inflation rises, then the Fed's chance of cutting interest rates goes that much behind, which means that with higher interest rates, the dollar will continue to be strong. And if the dollar continues to be strong, the rupee will have to weaken. It may not weaken more than other emerging market, or it may be strengthening relative to emerging market, but it's still net weaken vis-a-vis the dollar, which means that the rupee earnings of IT companies are going to get a boost, right? And the return of the FII. Now, FIIs get a real level of comfort from IT because that's one sector where information is clearly available, but they are easily able to counter check the information with the buyers in the US stock exchange because they have very good relationships there. So that comfort in terms of the consistency growth of these companies is much higher. So, and given the fact that FIS just started coming back, I expect mid-January onwards. I think the next month you give it a break because they are on holiday season. They'll come back in the first week of January, then redeploy. From mid-January, I expect a strong return of the FII. And when they come strongly, the passive funds have to buy the index. And there, if you see, IT is a significant component. So I believe that though IT has run up quite a bit on all of this news, I believe that the business prospects of IT with US company, US corporate earnings and corporate businesses being on a good wicket is good news for the IT sector. So I will continue to be, I think over the next year and a half, it's a good sector. On the banking and financial services, some part of what I said holds true to the extent that they are a big part of the large cap index. So the return of the FII means automatically passive money will flow in. And I think BFSI is about what 30-35% of the large cap space. So that much buying support is going to be coming in when the FIIs come back, number one. Number two, right? You're seeing that from the RBI governor's speech, the CRR rate cut obviously gave about a lakh of crores of additional lending, but the pressure on the margins, right? Now you have deposit rates and credit rates more or less matched at about 11 odd percent. So the pressure is not there. So this money which they get can easily lend. So their lending cycle looks good. Second is RBI governor also mentioned that the health of the banking sector is on top grade. You'll have to take his words there. And the third aspect is that I see that the next year is going to be driven by two key things. One is consumer discretionary growth, right? With the K-shaped recovery in the consumption going, I think that will sustain. And the second is the capex cycle. With the government restarting the capex program, which went on a back burner for the last 4 to 5 to 6 months. The next few months they will restart it, and then private capex coming back. Corporate lenders are going to have a very good time because, and the public sector banks would slightly have a tilted advantage because private sector banks tend to be more retail oriented, public sector banks are more corporate oriented, so they would tend to benefit. And the third aspect of the banking space, I would like to extend it to say BFSI and not ignore the right hand side of the BFSI, which is that which takes money from the customers, the wealth management firms, the stock exchanges, the broking firms, the asset management companies, and the insurance companies. I think with India's per capita income now touching $2,800, that incremental surplus is going to be sent into the savings stroke investment bucket. And I see good times for that side. So I think BFSI would again be a very strong pick for me. So IT and BFSI are my two top picks.